Hello traders, hello everyone, and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting structures for this week. This video has been brought to you by Orbex. Now, in today's video, I will look at gold, silver, S&P 500, euro, and dollar yen. Now, on gold, as you know, I'm still tracking this very complex and long correction here, long in time. Since last year of August actually. So I'm looking this to be a wave 4 within uptrend. Now if you're not familiar with the Elliott wave principle, wave 4 is just one corrective leg within the higher degree trend, which in my opinion it's still very strong. So it can represents opportunity within the trend, and this trend should remain in play until we see 5 waves up, because structures impulses represents the trend, and those are made by 5 subways. So here I'm looking for this to be wave 1. You had a wave 2, nice extended wave 3. Typically wave 3 will be extended, and then you have seen a slowdown for a wave 4, and I will be looking for a move into wave 5. Now wave 4 will typically trace for 38.2%, which so far has been the case, but still, because of very sideways price action, there is a chance actually that this market will either stay in consolidation for a triangle, or maybe even take these swing lows out and then maybe bottom later around 1600. So looking at the daily charts here, these are the counts that I'm tracking. Now the first one is a triangle. As I said, it's an ABCDE pattern, so far still incomplete. But what is really exciting about this one is that even if I I see this market staying in consolidation, maybe even for the next 2 months or so, it's still in the short term possibility that market will rise towards this upper trend line for a wave D, from the lower side of the range to the upper side of the range. Okay, now another wave count that I'm tracking is actually showing a deeper wave 4, the idea where you have this triangle placed in a wave B. Okay, and then you would look for a wave C drop. But again, what is interesting about this one is that even if that's a triangle in a wave B, well, I still think that there is a chance for market to rise towards this upper trend line, because I think that this subwave, the latest leg, is still ongoing here. So based on 2 different interpretations, we have in the short term one direction, which in my opinion can be to the upside. And to give you the full perspective here, well, notice that from that recent spike low that occurred a month back or so, we actually no, it's 2 months back, we can count actually 5 waves up and followed by very deep pullback. And notice that this pullback has overlapping structures. You have also seen a retracement for the 78.6%, okay, from where market rallied quite nicely to the upside, and looks like that market is now coming higher with small 5 waves up here out of this downward channel. So in my opinion, there is a chance that we will see further strength here. Now, of course, bullish level would be your wave X here, 1787, and this could make a room for 1850. Now let's take a look also on silver. This one, of course, has also seen a very deep retracement here. To give you again the full perspective, well, we have seen a very nice bounce from 2020 lows towards this August 2020 highs, and since then this market is just consolidating. And usually these consolidations are very slow, very tricky, and represents poses on the way up. So here I can see that previously the strongest move was to the upside. So clearly I would be expecting next direction to be again to the upside after this sideways consolidation is finished. So I'm looking either this to be wave A or wave 1 maybe, and wave B and wave 2 pullback. So I'm looking this to be now coming back towards this very nice potential supports here. We have a few swing highs here from the past, so I think that this could be very important levels around $20 here on silver. Now looking at the daily chart, I'm tracking potential flat formation ABC. Then you have a wave B that moved to a new swing high here, and then a very nice reversal all the way back to the other side of this range, where we have also seen very small move to a new low. Very similar, but in opposite direction, of course, compared to this past price action back in March. So in my opinion, there is a chance for this market to rally. In fact, I can see potential wedge formation here, but of course, wedge formation is not finished unless you see a break out of this pattern. So around $23, I think $23.50. I think that if we can see a daily close above that figure, that silver would see more upside. In fact, if we look at the 4-hour chart here, we can already see some very nice rise here back into the previous consolidation. So in my opinion, even if this would be an ABC rally, just a temporary one, I am looking for more gains here. Now let's take a look also on the S&P 500. Now, as you know, stocks came to the downside recently, probably due to this energy crisis, and of course, higher energy prices means that production is becoming very expensive, and of course, this can have a bearish impact on the economy. Now here, what we are looking at is a very nice break below this trendline support. So ideally, we are stepping into this wave for consolidation. Now the 38.2% comes around 4,000. So that would be ideal support, where wave 4 could be also very similar to distance compared to wave 2. But sometimes support can be seen already earlier, especially when you have already 3 waves down, or if the market stays sideways. And so far, I can see potential prices already in wave C with nice first support at 4,200, 4,230, around that area at the lower side of this parallel channel, corrective channel. So that's the first area of the support, and the second one, as I said, is around 4,000. So what is very important for me when I'm tracking this control trend movement is to see a response for the highlighted support, first support or the second support. But whenever I see a 5-wave movement from that identified fib levels, where could be limited weakness for this correction, when I see 5 waves up from that area, that's when actually I will be confident that market potentially completed a correction and that we are headed back to the upside. Okay, so I'm waiting on this type of a price action because before I may be even interested in some kind of a long setups here. It all depends on the upcoming bounce. Of course, I want to see 5 waves up on a smaller degree time frame charts. Okay, so that's for the S&P 500. Now let's take a look on the euro dollar. Now euro dollar came to the downside here recently. Now looking at the daily chart, we are still observing 2 wave counts. If you are tracking our videos, then you will know that we are either trapped here in a very big triangle here for a wave B, or maybe we will see recovery to be made by 3 waves back above 2018 2017 highs, if maybe this current pullback is corrective wave 4, like shown here on a daily chart. So it's a little bit tricky situation for the euro dollar, but I still think that sooner or later there will be a support around 1.15 is the first area that we should pay attention on. It's also this high from last year 2020 COVID spike, and then you have the second fib level much lower. So if 1.15 level can hold and suddenly we will see a 5 waves up from that area, then I still think that euro dollar could actually be headed back towards these January highs here. Okay, so very important for now is that we just observe the price action and wait on potential bounce before we make any decisions here. Now on the 4-hour chart, there is room, as I said, for 1.15 because I cannot count completed 5 waves drop yet. So at least in the short term, I think that there can be more weakness coming here. And then let's see what happens up there, down there. Now let's take a look also on dollar yen. Now on dollar yen, I've been bullish recently because we identified and been tracking this very complex triangle in a wave 4. So we were looking for a push higher into wave 5, and this came very nicely to the upside, very sharp and strong move. But now when we are approaching this February 2020 highs, I think we should be very careful here. Keep in mind that on the 4-hour chart, we can also count 5 waves up from that ending point of a wave 4. So ideally, market is again slowing down for a minimum 3 wave setback. And this setback can already be underway. Why? Because notice the drop from the recent highs is a very sharp one. It came out of this upward channel. So it means that this leg is finished and at least 3 waves should be in place, because always when market is in a corrective phase, you want to see these 3 wave structures, because those are made by ABC waves. Okay, so I'm looking for more weakness here. Ideally, that's a consolidation now. Maybe wave A, maybe even wave 1, who knows, maybe wave B rally now underway. Close at resistance here around 111.30 to a new sell-off here on dollar yen. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you next week. Bye.